Well, here we go. Earnings season is really picking up right now, and yesterday we had some stocks making some big moves once again. We had Starbucks, would I own? We have AMD, what I don't own, and Pinterest, what I used to own. And today we'll talk about these three stocks and their earnings. So I hope you enjoyed the video. Let's get started. So first on the list, the one that you probably clicked on this video for, Starbucks. Starbucks is down nearly 12% in pre-market. That's a mega move for Starbucks. It's going to have a big drop as the market opens, and that's going to put it down from $88 down to $77. Now, I recently became a buyer of Starbucks a couple of weeks ago because I thought, you know what, this stock is starting to get a little bit of attractive here, but I hope the stock went to $60 or $70 and I can buy more of it at cheaper values, because I don't want to buy a good stock at average values. I want to get a good stock at really good values, at cheap values, and that is starting to happen with Starbucks. So for me, this is my Christmas come early. I really wanted to build up a Starbucks position, but the only thing that put me off is that I wanted it a little bit cheaper. Some of the metrics were starting to stand out as being a little bit cheaper. Now this is definitely going to put it into the cheaper category, and like I said, for me, the more that this can go lower, the better. The more I can buy these shares at cheaper prices, and I'm looking forward to it. Now, I've not gone through the full Starbucks conference call, so I will do that before I actually do buy some shares. But at the moment, the plan is to probably pick some shares at some point in Starbucks if it is going to have this drop. Obviously, that's going to put the earnings now down even lower. If it could go into the teen range, that'll be absolutely amazing. And what that will also do is that'll actually push the dividend yield a little bit higher. Now, the earnings were terrible. There's no way to put it. It was a horrible earnings quarter from Starbucks. And it did also lead them to slash their 2024 forecasts by a fair amount. They were getting high single digit. I think they're going to be low single digit now. Yeah, you can see here that it's going to be growth in the low single digits, down from its prior forecast of 7 to 10%. And also you can see here the big miss on the EPS and the big miss on the revenue. And when you start looking at the numbers in more detail, it just gets worse. The change in transaction was down. For the US, the change in ticket was still positive, but the store count was up, and that didn't help it. And also the operating income was down. On the international segment, you had the change in transactions, so people going in the stores less, but also the change in tickets, so people are spending less when they're in store. And the worst thing is that the store count was up 9%, and these are the numbers they did. I mean, imagine if they didn't open up the new stores. The other thing to factor in as well with Starbucks is that obviously they have just come off a batch of price increases. So you imagine if they didn't increase the prices, actually how bad these results could have potentially been. It's not looking good for Starbucks at the moment. Maybe they need to mention AI and robot taxis, maybe robo waiters a little bit more, and then the share price will come back. But being serious with Starbucks, obviously it's not a good time for them. We've seen a lot of stocks at the moment. It seems like the cracks are showing in the economy. People are going into the stores less and less. They're spending less money at the moment. We've seen it with Nike. We've seen it with a lot of the luxury brands. People are starting to pull back the spending, and it's been clear in some of the earnings that Starbucks and other companies are having. This is something that's going on in Starbucks, and it could be something that doesn't disappear for the next 12 months. But that's what I want. If I'm going to buy Starbucks, I want the next 12 months to be painful for the stock so I can build up a position. I want the worst news to come out in the next 12 months. Realistically, when I'm looking for the longer term, if I hold this for the longer term, 3, 4, 5 years down the line, is there still going to be a Starbucks on every corner? Yeah. Is the economy probably going to be in a better place? Yep. Will Starbucks probably recover from this time frame? More than likely. So when I look at the longer term from Starbucks, it's in a good place. In the short term, there's a lot of pain going on with the pullback in the spending. You could also add potentially some of the boycotts going on at the moment, which obviously is being led by a lot of misinformation out there. But in the longer term, I think Starbucks is in a really good position. So I've got to say, I thought the results were horrible today, and the stock deserves to be down as much as what it's down. But in the longer term, I think you could be getting a great brand at a good price at the moment, and especially if it starts going even lower than where it is today, from this $77 range into the $60 range, I think that comes really attractive for Starbucks. So I definitely think it's worth a look into at the moment. Next one was AMD. So AMD brought their results out and the stock's down 7% in pre-market. I've got to say, I thought these results were nearly probably as bad as Starbucks. Considering the valuation of AMD, probably worse than Starbucks. When you look at Starbucks, it was already coming on these earnings pretty ugly, down for the year 5%. The last year it's down 22% when the market's been rallying. AMD is a total different story. If you look at the year to date, the stock is up 14% year to date. If you look in the last year, the stock is up 76%. The stock was rallying up coming into these earnings, but the stock is only down 6% with earnings that I would say is just as bad as Starbucks is. If you look at the EPS, yeah, they beat, but it was only by $1. Revenue, yeah, it beat, but it was by 20 million on 5.4 billion. That's so small. And the growth was 2.2%. Now, I don't care what you say. If you are a company trading at 301 times earnings and you come in with revenue of 2.2% and your profitability is still pretty poor. I mean, if you look on a net income basis, there's still net income only went from 139 million loss. Yeah, it went positive, but it's still 123 million loss. That's still not good enough in my opinion. And I mean, they're all pointing to the data center segment saying, oh, look, it was up 80%. But you look at some of the other segments, I mean, gaming as well, down 48%. It's just not good enough in my opinion. These numbers are way, way poor for a company that is a, rally. This is priced in as like an AI play. And yet the numbers are showing no signs of the AI play. Yeah, people point out to going, hey, look at the data center, it's up 80%. But everything else is getting absolutely crippled by the business. And I just think that this is getting a lift up because of Nvidia as like, oh, it's an alternative to Nvidia. But it's nowhere close to the numbers that Nvidia are doing. And even if you look at on the forward basis as well of AMD, I mean, it's growing at 44 times earnings. I'm sorry, but a 44 times earnings business shouldn't be growing at 2%. And I think even next year it's forecast to grow like maybe 10% a year. Sorry, that's not good enough. And I thought AMD's results were very poor, and I'm still surprised the stock is up as much as, well, it hasn't gone down more than what it is. And I'm surprised the stock is still up 76% this year, because I see results that definitely don't reflect the valuation here. I think few people are buying this as like, oh, it's another alternative to Nvidia. I just don't know why you won't go buy Nvidia. You look at Nvidia and they're actually ramping up the profitability. You look at the current year, the EPS is going to over double or nearly double. You look at next year, the EPS is going to double again. With this one, you haven't got 2% revenue growth. You got a company that's going to grow 275% next quarter, 83% in 2025. When you start looking at the valuation of Nvidia, you're picking this company up at 35 forward times earnings. You can buy Nvidia that's growing a lot faster than AMD at a cheaper forward times earnings. I just don't know why you won't buy Nvidia. They are easily the leader in AI with the chips, with the technology, with the growth, with the profitability. And you look at some of the new chips that are coming out, like the Blackwell platform. I just don't know why you would not go buy Nvidia over AMD. I think AMD is lucky that a few people are looking at this and not connecting the dots here that this isn't Nvidia. If you want Nvidia, you own Nvidia. You don't buy AMD for Nvidia. So yeah, I'm surprised that one's hanging up as or still maintaining its gains that it has from what I thought were pretty poor financials. And the last one was Pinterest. So Pinterest is one that I used to own. I did sell out Pinterest about a year ago, maybe a bit longer than that. But the stock is up 16% in pre-market. Really good jump in pre-market. I owned it for a while. I bought in 2019 after the IPO dip. Sold a lot out for, I think, 300-400% return, and even a few months ago I sold it for a decent amount of profitability. Since then I probably should have held a bit longer because the stock has gone up a bit more, but I didn't expect it to. This has really surprised me, and fair play to Pinterest. The numbers are a bit better than what I thought they would be. EPS was a decent beat, revenue growing at 22%. I didn't expect a 22% rebound, and a really good beat as well. Look at this, 40 million beat on 739 million. That's impressive. And the numbers just get a little bit more impressive. I mean, global monthly active users were up 12%, so people are still joining the platform and using it. I'm really surprised because I don't really see that many people talk about Pinterest. I don't see them use it that much. I'm really surprised to see monthly active users still going up, but it is, a lot of it isn't from the US, a lot of it comes from the EU, for example, and the rest of the world, so maybe that's what sometimes gets missed. But the only thing that put me off is that they are still at a net loss. You would expect it to maybe be a bit better, but something to point out there. But yeah, you look at the average revenue per user, you look at the revenue, and yeah, it's clear to see we're seeing a big rebound in the marketing companies. I didn't think we'd see this much of a big rebound, but the marketing companies are coming back strong at the moment. Whether that be, you looked at Google's numbers, you looked at Meta's numbers, now we've got Pinterest numbers. the very good rebounding in the marketing space. And I look at someone like an S4 Capital now, and I obviously the Q1 updates next week, I expect them to put good numbers in, otherwise I'm really worried here, looking at a lot of other companies now. Revenue, obviously really good rebound. Monthly active users, rebound once again. As you can see here, a lot of the growth comes from Europe and the rest of the world. If you look at the average revenue per user, good growth, as you can see here, around the world, especially in the US and Canada, which is the higher end of where they get their money from. Look at the difference between the money they make off the US users. It's nearly $6. Compared to the rest of the world, it's hardly anything. So that's the only downside with Pinterest, is that because it's a lot more of an active platform in like Europe and rest of the world, the dollar amount they get for the advertising isn't as much. But that's where they're growing a lot at the moment. On the expenses side of it, they did seem to control the expenses a little bit more. As you can see here, cost of revenue was up once again, but not as much. Same with research and development. Sales and marketing was up again. So this was one of the big things why I sold, is that the expenses just kept going up, and they are still going up. Not as much now, so they are starting to control it, and they listen to what I told them to do. But could be a little bit better, but it is getting better. It's moving in the right direction. One thing that I don't like is the stock-based compensation. The stock-based compensation has gone so much higher on this stock, as you can see here. This is one thing I didn't like, is that how much this went up. It's still going up, so it's still definitely something they need to work on. It's not, I guess it's an improvement, but that's definitely one of the big red flags that I've had for Pinterest, and it's still going on there right now. So I mean, overall with Pinterest, I thought the numbers were good. Good EPS beat, good revenue beat, growing really fast. The user growth is coming back, advertising is coming back. So overall, a lot better numbers than what I was expecting. I'm still worried about some of the expenses, some of the stock-based compensation in the business, but it's certainly moving in the right direction, and certainly in the right direction more than what I thought it would. So it's doing okay at the moment. So we'll keep an eye on Pinterest, but the big takeaway once again that I have from this is that the rebound in advertising is coming back massively at the moment. So yeah, overall, Starbucks, terrible numbers. However, I think it's definitely one to maybe consider for the long term. AMD, just as bad numbers, but at a crazy valuation. I don't know how this stock is not down more. Pinterest, overall, yeah, I've got to say, the numbers were a lot better than what I expected. Still, there's a few things that make me a little bit nervous with the stock-based compensation and the expenses increasing, but it's definitely moving a lot more in the right direction than what I thought it would. So yeah, not bad at all from Pinterest. So those are the 3 update, guys. Hope you enjoyed it. Let me know what you think of these 3 stocks, and I'll see you in a bit.